Hello guys, welcome to GraceTalksWeb3. It's the live streaming on daily basis. So the agenda today it's gonna be around biggest crypto news of the day. It's the news around Bitcoin and live market check-ins, including market opinion and the trading campaign, as well as we are going to talk about the product lives as well. And before we begin, just don't forget to comment, like, and subscribe to stay on top of the market. And this is the outline. So I break down the outline of the live streaming into 5 segments. So first it will be the biggest crypto news of today. So I have 5 news for you guys. The first one is gonna be the essential Bitcoin price points traders should track right now. And the next one is the ARK adds $9 million in circle, and they still stay bullish as crypto stocks keep sliding. And the third one is the review of the Coinbase that they have 9 crypto ideas it wants to bankroll in 2026. And the shock news among the Korean exchange, I found out that Upbit considering appeal of $25 million fine by South Korea regulator. It's maybe positive shock news. Let's take a look after this together. What are the development of the news and the movement after China banned Bitcoin miners in 2021. They rebound. Bitcoin mining's rebounds in China again this year. So we'll take a look of the news together in this live. And we will talk about the crypto bubble, CMC, Fear and Greed Index, dominance, and altcoin season, top trending token, top 20 search, and top 20 most visited coin in the last week. And we will see the inflow, outflow of the money coming in, buying more Bitcoin or selling out the Bitcoin. And we will see the Memecoin list as well as the token unlock. So overall, this is the live market check-in in the second section. And the third section, we are talk about the market opinion. For today's opinions, I picked the first one. JPMorgan's Bitcoin structured notes offer potential massive returns under the condition that if BTC surges by 2028. So this one has been featured on Decrypt crypto new. And the second one, the opinion has been featured on CoinDesk. They are sharing the perspectives, treasury bubble, and we will take also look of the trading campaign of the L Bank. So we will summarize what are the activity that is ongoing right now, and when is gonna be the end of the campaign, how much the weeks or timing that you have left, and we will talk about the product, right? that has been shipped to the market. So that will be the MoonPay because it granted New York Trust Charter, joined Coinbase and Ripple. And the second one is the HIP3. It's a future of finance that Hyperliquid price can be predicted based on this patch update. So this is the overview of the live streaming that we are going to talk about today. Okay. Let's begin. Let's begin with the biggest today. So I have got this new. It has been out in the afternoon today. It's the of the Bitcoin price that traders should track right now. So far, this is the headline, and they said major moving averages on price charts are likely to act as the key battlegrounds where bulls and bears fight for the control. And these are two key takeaways that you need to know. So Bitcoin traders are optimistic about potential Fed rate cuts, right? So this element could aid the BTC recovery lately, and price charged. Sorry. Price charts show. Sorry. Price charts show major averages as the gatekeeper, so it can define the battle lines between the bulls and the bears. So BTC right now it's $86,000. So Bitcoin traders buckle up. It's so funny. Okay, renewed optimism around potential Fed rate cuts. They said, Bitcoin trader, you need to buckle up because renewed optimism around potential Fed rate cuts is lighting a hopeful spark for BTC's recovery. And there are some key price levels worth noting. So the first thing that is on radar, the 200 hours simple moving average SMA currently seen close to $88,000. So this level has been playing the role for the ceiling since Monday and putting the brake up on the side moves. And yeah, this is the area that we are talking about. And this is the twist. So this SMA has stopped sliding downward. It signals the selling pressure might be losing steam if BTC can break above this. So it could rev up uh, the traders confident and set to stage for sharper recovery rally. And think of it as the Bitcoin shaking off the dust after a slow crawl. And the next resistance to watch is 98 to 99 zone. It's the stubborn battleground marked by multiple daily lows earlier this month and back in June. So the big daddy, they say, the 50-week SMA just north of $102,000. So this was the hero for the bulls, acting as a strong support line multiple times throughout 2023 and falling bigger gains every time it held. So, but in early November, prices pierced through this level, confirming a bearish trend change. And if BTC can stand a triumphant comeback above this SMA, it would signal a revival of the big picture bullish trend. Think of it as the light at the end of the tunnel. So this is the summarization of the positive news. So the key support levels, it's that don't forget your safety nets. So the most critical support level hovers around $83,000, where 100-week SMA and a macro bridge 10 line intersect. It's a break beneath this would be a red flag, cementing the recent bearish shift and potentially opening the door to deeper losses. So should that happen, the next cushion to catch the fall is near $74,000. It's a level sellers ran out of steam in early April, so they can pave the way for a renewed upswing. And taken together, these key levels point to an exciting trading landscape. So, with major average acting as gatekeepers, defining the battle lines between the bulls and the bears. And if we are going to move next to the markets news, we have right here ARK Investments, and the the amount that they add, it's $9 million in circle, and they are still bullish as the crypto stock keep sliding. So on November 25, buys include $7.6 million in circle and $1.5 million in bullish. So with both stocks down on the day as BTC trades around $87. So these are the key takeaways that we need to know. ARK Invest purchased $7.6 million in Circle shares and $1.5 million of the bullish stocks on Tuesday. So the acquisition occurred as crypto prices remain soft, with Bitcoin near $87,000. ARK's largest crypto holdings include Coinbase, accounting for 4% of its total holding, and Circle make up right now 2%. So they have Coinbase and Circle together. So ARK Invest bought about 7.6 million of Circle and 1.5 million of Bullish stock on November 25, extending its crypto equity buying even as both names trader lower, and Bullish is the parent company of Coindesk. Wait, really? Congratulations! And the move came while crypto prices were still soft, with Bitcoin hovering near $87,000. Bullish closed at 40.50, down 2.41%, while Circle fell 3.62% to $70. So ARK also purchased 15,000 shares of Coinbase stock worth roughly around $4 million, about 250 dollars per share. So coin is down around 30% on month, matching the rest of the sector's broad decline. And the November 2025 trades follow ARK's larger November 20 dip buy when the firm accumulated hundreds of millions of dollars in crypto-related equity across its flagship ETFs as Bitcoin crashed. So in total, ARK holds 152 roughly $1 million of Bullish shares across its various funds. Its largest crypto holdings are Coinbase, which accounts for 4% of its total holding, or $500 million roughly, and Circle, which comes in at 2% of holding, around 255 million. But I am so surprised. I just know I saw Coindesk last minute is the under it as well. Or is it? I lost. I cannot find it. Wait, really? Oh, or maybe I just my eyes are blurry. Oh, Bullish. Bullish is the parent company of Coindesk. Yes. So ARK Invest bought Circle and Bullish stock. So Bullish is the parent company of Coindesk. Okay, that's really good to know. It's actually bullish for me too, not just for them. Okay, and moving next to the crypto news on the venture arm. So we have right here Coinbase reveals 9 crypto ideas that it wants to bankroll, they want to finance in 2026. Coinbase Ventures outlined 9 investment priority for 2026, spanning RWA, perpetual specialized exchange, DeFi composability, and AI-powered development tools. So first thing first, the venture capital division of America's largest crypto exchange says it is targeting its funds toward the real asset trading, real DeFi, and artificial intelligence next year. Let me take some note to do the recap as well. And okay, in the blog post, Coinbase Ventures stated that uh, it is actively seeking to invest in teams involved in the asset tokenization, specialized exchange, and trading terminals. So next generation DeFi and agentic AI advancement. And so the firm quote this: these are the categories where we believe the next big breakout companies and protocols will emerge, and where we are looking to actively invest. This is the quote from the firm. So Coinbase Ventures had made 618 investments since 2018 and to 22 startups. This is according to the pitch book, and its most recent investment in DeFi compliant platform 0xBO on November 18, while it invested payment infrastructure firms like Sync ZYNE and SAR ZAR and prediction markets platform in Karshi in October. So there is the thread on X that Coinbase Ventures Kinji Stismes said the rise of prop AMMs, proprietary automated. It's a new exchange design that protects liquidity providers from exploitation by sophisticated trader and bots. So Coinbase Ventures investor Nathan King predicted the emergence of prediction market aggregator, so which we expected to emerge as the dominant interface layer, consolidating $600 million in fragmented liquidity and providing a unified view of real-time event odds across the venue. And this is the volume current prediction market stats for Cauchy and Polymarket. For the prediction that is going to be the next generation DeFi of immersion in 2026. Right here we have the integrating perpetual futures exchange with other DeFi protocols such as lending. So this would enable trader to earn yields on collateral while maintaining leveraged positions, unlocking new capital efficiency. This is the Coinbase Ventures investor, Ethan Oak. And Oak also predicted growth in on-chain privacy preserving tools, observing a surge of developer energy focused on privacy preserving assets such as Zcash. And meanwhile, King saw an emergence of DeFi protocols that blend on-chain representation with off-chain data to enable unsecured borrowing at scale. So the market opportunity is massive, he said. So the US alone has 1.3 trillion in revolving unsecured credit lines that crypto can capture through superior capital efficiency and global accessibility. So agentic AI depend and proof of humanity growth predicted the final three innovation were in the AI sector, and there is a gap in training robotic and embodied AI system where available data sets are still limited and fragmented. So this is what estimates said. And decentralized physical infrastructure network, as we know, depend, right? It could offer a viable framework for scaling the collection of high quality physical interaction data for robotics and proof of humanity solutions which combine biometrics, cryptographic signing, and open standards to verify human versus AI generated content. It would be a growth area in 2026. This is the statement of Huli Teshivani, head of Coinbase Ventures. And finally, there will be an emergence of AI agent tooling that enables non-technical founders to launch on-chain businesses quickly. So 2020, 2026, we might be able to see the AI agents further democratize on-chain building. This is the statement from King, and he added that they would be able to handle smart contract code generation, security audits, and continuous monitoring as well. That is good. Okay. And there is the policy news right here. Upbit assessing South Korean regulators review after $25 million fine. So the country's largest crypto exchange said the financial intelligence unit has been wrong in the past and had actions overturned in the court. And this is the area to know. So Dunama, it's the operator of Upbit, said it is looking at the findings of a review by the Financial Intelligence Unit that led to a 2025 million fine for AML and KYC violations. So the unit also suspended new customers' virtual assets transactions at South Korea largest crypto exchange for 3 months and issued warning to executives as a part of a border enforcement initiatives. So Dunama pledged to enhance investor protection measures and ensured a safe trading environment for its customer. And this is the first paragraph to say that the company is looking at the review findings also corrects that new customers' transactions are constrained. An earlier version of this story said Dunama was considering an appeal on and onboarding new customers out for 3 months. So Dunama, the operator of South Korea's largest crypto exchange, said it is assessing the findings of a review by the intelligence unit of South Korea's financial watchdog after being hit by a 35.2 billion won. So overall, it's $25 million fine and other sanctions as well. So in addition to the fine, the financial intelligence unit imposed a 3 month suspensions on a new customers at Upbit from transferring virtual asset and issue warnings to executives as it clamps down on anti-money laundering violations and know your customers violations. So local news service Newsys report on previous Monday, and this is the message from the spokesperson. We are conducting a careful internal interview, including an assessment of the accuracy of sanctions finding. So Ada Dunamo spokesperson told Coinbase via email. So the unit has been wrong in the past. And he said the FIU imposed a 2 billion won handbid call for KYC shortcomings involving roughly 100 users, which a so-court subsequently overturned, concluding the violations did not lead to money laundering, the spokesperson said. So the local financial authority said the campaign a broader initiative to strengthen anti-money laundering enforcement within the country's digital asset sector. So it explained that inspections have largely focused on KYC compliance and reporting of suspicious financial transactions. So during on-site anti-money laundering inspections conduct on Dunamu, the FIU discovered approximately around 5.3 million cases of violations regarding the customer verification obligations. So it said earlier this month, it also said Dynamo failed to report suspicious transactions on 15 cases. So Dynamo Upbit Korea has reinforced its investor protection measures and will work even harder to prevent a recurrence. So the company spokesperson said this, and we remain committed to providing a safe trading environment for all customers. So the news of inspections come as the Financial Services Commission orders exchange to suspended new crypto lending products until formal guidelines are implemented, citing growing risks to users. So the FIU is an agency of the FSC. Going forward, the FIU will continue to inspect and review the legal compliance system of virtual asset operators to establish a robust anti-money laundering system. This is what the agency said, and it's the separate statement. The FIU reported inspections on 4 other crypto one Corbit and GoPax to regulatory compliance and found they were also in violation of several rules and regulations. So none of the exchanges responded to a Coinbase request for a comment, and the last paragraph, so they said the Korean financial regulatory campaign is conducting its campaign in a first in and first out sequence. So with each exchange inspected in the other, with exchange inspected in order, they were reviewed. Dynamo was the initial target after August 2022. So this is the Corbit and GoPax and then Bitham and then Coin One. So based on the CoinGecko data, six crypto exchange operate in South Korea, including Upbit, which is in the process of merging with Never, said to be one considering an IPO or Nasdaq. Bitham, Corbit, Inex 11 and GoPax with a combined trading volume in the last 24 hours of approximately $2.6 billion. And moving to see the news from Reuters. So I have just found this news on Reuters a couple hours ago, and as we all know that cryptocurrency has been banned in 2000 since 2021, right until now. And this is the news that I found: Bitcoin mining in China rebounds. So there are three summaries. First one is China's Bitcoin mining market. Mining market share. It's rebound 2/3 globally. This is the hash rate index show this. And let's take a look at the hash rates. It's just the company or the okay. Hardware resource. Okay, I'll come back at it later. So hash rate index show and Beijing's softening stance cheap electricity attract crypto miners, and Bitcoin seen as a strategic asset amidst US rivalry, analysts say. So on November 24, Bitcoin mining is quietly staging a comeback in China despite being banned 4 years ago, as the individual and corporate miners exploit cheap electricity and a data center boom in some energy rich provinces, according to miners and industry data. So, China has been the world's biggest crypto mining country until Beijing banned all cryptocurrency trading and mining in 2021, so citing threats to the country's financial stability and energy conservation. And after having seen its coin mining market share slumped to zero, so as a result of the ban, China crept back to the third place with a 14% share at the end of October. This is the information according to the hash rate, which tracks Bitcoin mining activities. So this resurgence in Bitcoin mining, which has also been corroborated by rig maker Canon Inc. or Can.o, fast rebounding sales in China could act as a demand and price support for the world's largest cryptocurrency. So, Mr. Wang, a private miner in Xinjiang, said he started mining late last year in the energy abundant province. So, a lot of energy cannot be transmitted out of Xinjiang, so you consume it in the form of crypto mining. Wang said, asking to be identified by just his last name. New mining projects are under construction. So what I can say is that people mine where electricity is cheap. So China's state planning body, the National Development and Reform Commission, which issued the ban in 2021, said the Xinjiang government did not reply to faxed, rather requests for comment. So mining resurgence is like Beijing's crackdown on the sector in 2021 led to miners shut down local operators and fleeing to overseas markets such as North America and Central Asia. So the rebound in Bitcoin mining coincides with the digital asset hitting record highs in October on the back of the US President Donald Trump's pro crypto policy and growing distrust toward the dollar, making crypto mining more rewarding. So the cryptocurrency, however, is down a third from its October peak. A global risk appetite once Chinese policy flexibility emerged when economy incentives are strong in specific regions. This is Pratik Karan, CEO of perpetuals.com, a provider of crypto market infrastructure. So the resurgence of mining activity in China is one of the most important signals the market has seen in years. And China has not officially relaxed Bitcoin mining curbs, but even hints of China's policy easing could act as a tailwind for Bitcoin relative as a global statement resilient asset. He said, pointing to a industry data signaling renewed activity and Bitcoin mining, the energy intensive process of using specialized computers to solve complex puzzles to win Bitcoins. So it is especially active in power abundant hinterlands such as Xinjiang, according to miner and rig makers. So Sichuan-based De Kuang, who quit Bitcoin mining a few years ago due to the Chinese regulatory ban, said some of his friends have come back to the business recently. It's a sensitive area, but people who get cheap electricity are still mining. And more than that, higher Bitcoin price, a glut of electricity and computing power following over investment in data centers by some cash-strapped Chinese local governments felt the rebound, said a source at a Bitcoin mining rig maker who did not want to be identified due to the sensitivity involved. So policy, the trends is also captured by sales data from mining rig maker Canaan, the world's second biggest Bitcoin mining machine maker generated 30.3% of its global revenue in China last year, compared with 2.8% in 2022. In the aftermath of the crackdown, according to the company filings, China's contribution to Canon sales jumping toward to more than 50% during the second quarter that this year. So, according to a source with direct knowledge who declined to be named as he's not authorized to speak to the media, Canon Wish did not confirm the second quarter sales breakdown attributed its growing sales in China to this year's US tariff uncertainty that disrupt US selling, rising Bitcoin price that make mining more profitable, and subtle shift in China digital asset posture. In an email statement, the base company said its activity remained fully compliant with Chinese regulator, but refused to comment on mining in China. So in China, the R&D, manufacturing, and sale of mining machines are permitted. The peak in Bitcoin mining in China comes amid signs that Beijing has softened its attitude toward digital coins. These were once seen as a challenge to China's fiat currencies and abetting capital flight. So Hong Kong's stablecoin bill, for example, took effect in August, enabling the Chinese city to compete with the US in fostering a regulated market for fiat currency-backed cryptocurrency. So China was also considering allowing to use by yuan-backed uh, stablecoins to boost the wider adoption of its currency globally and catch up with the US push on stablecoins. So Router reported in August, citing sources familiar with the matter. And Bitcoin mining is still officially banned in China. However, there continues to be significant capacity operating, said Julio Moreno, head of research at the CryptoQuant, a blockchain data and analytics firm. So, CryptoQuant estimated that 15% until 20% of global Bitcoin mining capacity currently operates in China. So Liu Honglin, founder of Man Kun Law Firm, said it is hard to wipe out a profitable business. I personally think government policies against mining will be gradually loosened because you simply cannot stop such activity completely. So this is the comment from the boss, and we move to see things in the market. Okay. Moving on to the coin market cap. Oh, we have right here the top trending tokens. First one of the day it's Plume, Xeon Pi, Mer, Wolfi Esports or KO, DMCP, Timmy, AVL, and market cap today it's slightly lower than yesterday. It's $2.99 trillion, so it's dropped by around 0.3%. And fear and greed index today we are at the 15, and altcoin season we are in the time frame of 25 out of 100, and the crypto RSI averagely we stay in the 50 or 50.17. So if we take a look at the crypto RSI heat map during the oversold area, we have meme core APT Aster Sat Easy, Trump, Sky, Morpho, Tail, A, Sen, Soon, XCH, OG, AT, and overbought we have seen right here. I am seeing ENA, AXUT, KAS, and what else? JST, Pando, KMNO, UDS, CTMOM, Home, XVST, SLAX, BICO. But the area of the neutral, the gray area is the neutral area. I have BTC, ETH, XRP, BNB, Solana, Doge, TRX, ADA, Hive, XLM, XMR, LTC, Sui, Ton, MNT dot near Aster ETC KCS Redfield Dash San ENS Solar Linear Luncy Popcat, and we see the price of Bitcoin. We have right here $86,000, and Ethereum $2,900, BNB $857, and Solana $133, as well as XRP $2 and 2.140 XRP, and ETF net flow as of the yesterday we have coming in 207,000 US dollar. Dominance we have Bitcoin around 58%, Ethereum 11.7%, and other token 30.3%. Okay. If we move to see crypto bubbles, see the day, Monad is going strong. So we have pumping so much. It's 34, almost 35%. and token price right now is 0.04 $0.04. And then SPX coming 18% with the current price at $0.6. Is there any token for 10%? Don't have. IP Story Protocol is up 8.5% with the current price $2.6. And Tau plus 6% with the price $310. Cash still going good. It's up 5.4% with the price $0.05. And then ENA as well plus 5.4% with the price $0.28. And we have Dash, OKB, Quant, INJ, XMR, Hype, Stark, RCP, Pi. Next, so for the week, rent is going strong for driving 117%, including XPX, CAS, Wo-Fi, Pi, and the rest is drawing down during the week time frame, whether it's the virtual dash as the uni, SADC, TR, dot maker, Trump, Pump, ARP, Stark, FedWet, RTC. And okay, for the popular search and visit on crypto rank, I have on the left column is the popular search and visit on the crypto rank. So we have XRP, Global Dollar, Wo-Fi, USDC, Bitcoin, Solomon, Wave, Virtual Protocol, Pi Network, Zcash, Shiba Inu, USD1, Jupiter, Memecoins, Casper, Pancake Swap, Arbitrum, Uniswap, Tesos, Injective, and for the top 20 of the most visited coin on this website, we have Monad, Bitcoin, Starknet, Ethereum, Solana, Tensor, Ray, Escape, Aster, South Perk now, Kalshi, Iris, Zcash, Sui, Bob, Raya Labs, Volts, Hyperliquid, XRP, Aptos, CK Sync. Okay. And we are moving on to the coin class to take a look at the Bitcoin spot ETF inflow and outflow. It's the inflow today. Blacklock bought more Bitcoin 940 Bitcoin. Fidelity bought more Bitcoin 1,940 Bitcoin. ARC B sell 860 Bitcoin. BitB sell 140 Bitcoin. Bitcoin hold 420 Bitcoin, and the rest of the number it's still in the green number. 1,460 Bitcoin has been purchased today. And we see the meme coin, we still have the same Picker Solana, 2BNB, K403 Solana, CKSL Solana, Blue on base, How on base. And this is the token unlock of this week. Okay, so we have Myra, Snap, Zai, NFP, Unity, Go, Sable. It's not the main project that we all know. Sahara AI, BitLayer, Pathwords, Open Campus is coming. Altitude. In protocol, Juventus fan token. Another team fan token. And this is another market opinion that I would like to share. So they say JPMorgan's Bitcoin structure notes offer potentially massive returns if BTC surges by 2028. So the bank has an idea for a product that would allow investors to make big gains if the rating cryptocurrency soars. These are the key takeaways. So JPMorgan Chase has posted a new leveraged product allowing investors to bet on the future price of Bitcoin via BlackRock's iShare Bitcoin Trust. And if it's approved, investors could make 1.58 whatever gains the cryptocurrency makes. So, but as with all leveraged products, losses could be compound if Bitcoin's price crashes. So JPMorgan Chase has filed with regulators for a leveraged product that would allow investors to bet on the future price of Bitcoin and potentially earn uncapped return if the price of BTC falls by late next year, but then soar by 2028. And on Monday following with the SEC from the top banks shows that the proposed leverage product in the form of a structured note would allow investors to bet big on the leading cryptocurrency where BlackRock's iShares Bitcoin Trust exchange traded fund. So the financial instruments has some quirks. However, according to the prospectus, if the price of the Bitcoin ETF is equal to or above the set price by December 21st next year, then JPMorgan will call the notes, providing a payment of at least 160 per note. So it priced at 1,000 a piece. But if the price is below that mark in a year's time, then the notes will keep riding until 2028. And in that case, if the product is approved by the SEC, right? So investor would be able to earn 1.5x return on whatever gains the cryptocurrency makes by the year 2028, potentially clearing the way for massive rewards. So JPMorgan called the potential return uncapped, which means if Bitcoin soars to new height by 2028, which means the ETF's share price would follow suit, then the amplified gains could be sizable indeed. So Bitcoin price cashed hard by 40% or more, then investors would lose a substantial portion of their initial investment. According to the following big risk, big reward or losses. So Bitcoin has historically exhibited high price volatility relative to more traditional asset classes and has experienced extreme volatility in recent periods and may continue to do so, which may increase its volatility of the fund. So the following notes, Bloomberg ETF analyst James Sefford told Decrypt that common for banks to do so these sort of things on pretty much any asset you can think of. And BlackRock, I share Bitcoin trusts in the most popular of the BTC ETF that is SEC approved and allowed to start trading last year. So the fund currently manage $16 in assets. So JP Morgan's product is the latest in a long list of leveraged funds tied to the performance of digital coins and tokens. So over the past couple of years, ETFs that hold that to amplify their position have hit the markets. So with such products, return for investor can be greater than the tracked assets gains, but losses can also be compound too. And JP Morgan Chase is the biggest bank in the US, as has a complicated history with digital assets. Its CEO Jamie Dimon has long criticized Bitcoin, but praised blockchain, the underlying tech that powers Bitcoin, Ethereum, and other cryptocurrencies. So the bank in recent years has been more open to digital assets, and this month debuted a digital dollar deposit token using Coinbase network. So this is the overview and development of the JPMorgan Bitcoin's structure nodes. Okay, and before we move to our other details, we have another opinion as well. So this is going to be the upcoming Bitcoin treasury bubble. So today's uncertain macroeconomic climate has created an environment where corporate leaders are desperate to look innovative, and Bitcoin treasuries give them a way to do that without fixing their broken business model. This is the co-founder of the Bitcoin races, Savage. And in the recent months, more companies have announced plans to adopt Bitcoin treasuries. They claim this as vision-able move toward the future of finance. It's a hedge against the inflation and a side of corporate sophistication on the surface. So it sounds like progress. In reality, most of these Bitcoin treasury are a dangerous distraction pushed by firms that offer little to no actual value in the marketplace. And corporate treasuries were never designed to be speculative ventures. When companies turn to Bitcoin not as a genuine conviction, but as a publicity stunt or last-ditch effort to stay relevant, it signals desperation rather than innovation. So Bitcoin treasuries are being sold as innovation, but most are nothing more than corporate gimmicks unless investor wise up. This could be the next ICO bubble in the making. And some big companies and other magical thinking, they say companies with no real growth, weak fundamentals, or outright declining businesses are latching onto Bitcoin as if it were a magic fake. So this is a disturbing pattern. They are not solving problems, creating value, or building sustainable products. So there are some big companies, date in all but name, trying to borrow life by stapling Bitcoin onto their balance sheets. And this mirrors the early ICO craze of 2017 when struggling project raised billion through token launch with no path to real world utility. And back then, many of those ventures collapsed, leaving retail investors holding both rates back. So today's Bitcoin treasury announcements is repeating the cycle. So the difference this time is that instead of speculative tokens, companies are using Bitcoin itself as the centerpiece of their hype. So Bitcoin is not the problem. It remains the most secure, decentralized, and censorship-resistant monetary network. So the problem lies with corporation trading Bitcoin as a PR strategy rather than a treasury asset rooted in the long-term conviction. So why it's matter now? Hype is on the rise, right? So why so I sound the alarm today? It's because the hype is accelerating, just as 0% interest rates feel reckless. I saw speculation today's uncertain macroeconomic climate has created an environment where corporate leaders are desperate to look innovative. Bitcoin treasuries give them a way to do that without fixing their broken business model. And but the stakes are higher now than they were during the ICO boom. When a company puts Bitcoin on its balance sheets, it's not just speculating with investor hype, it is speculating with the shareholder capital. So that creates a systemic risk for employees, pension funds, and retail investors alike. And for the average person, the pitch is seductive. So learning self-custody or buying Bitcoin directly own shares in a company that holds it for you. So this sounds safe, but in practice, opposite, it layers corporate risk and debt exposure as well. as the governance flow on top of Bitcoin, turning a hard asset into a fragile derivative. So, what real solutions look like? There is a clear alternative. So, individuals should own Bitcoin directly in self-custody. So, the lessons of failed exchange and collapsed intermediary from Mr. Gog, as well as the FTA, could not be clearer. Handling control in a company defeats to very recent Bitcoin exists. Firms with robust business model and clear strategies may succeed with Bitcoin treasuries, but they will be the exception. So the vast majority will fail because they are now fundamentally aligned with Bitcoins or Ether or financial distracting attention rather than creating the value. So counter examples. Strategy led by Michael Saylor has been widely publicized for its aggressive strategy of accumulating assets. So some argue that corporate Bitcoin treasuries like this can bring broader legitimacy and accelerate institutional adoption. While it's true that I feel well capitalized, disciplined players may withstand the volatility and integrate Bitcoin meaningfully. So those examples are not the norm. For every winner, there will be dozens of losers, companies with shaky balance sheets and reckless leadership using Bitcoin as a short-term stand. So the publicity around high-profile success story only make it easier for these bad actors to sell their narrative to investor. And even in the best cases, a corporate treasury coin is not the same as an individual holding their own keys. So shareholders are still subjected to manage decisions, regulators, and layer of middlemen. Bitcoin's true power lies in direct ownership, not corporate custody. So there's Bitcoin and then there's everything else. So Bitcoin treasuries may need headlines in the coming months. Some will be hailed as visionary, others will be quietly disappear as balance sheets blow up under. So the bubble will inflate as long as investors believe that attaching Bitcoin to a weak company magically transforms it into a strong. That hype cycles eventually burst the ICO boom. The metaverse mania fed Bitcoin treasury will follow the unless the narrative shifts. So the solution is simple. The individual who believes in Bitcoin should buy it directly or earn it themselves. So that does not make for flashy headlines, but it is the only approach that aligns with Bitcoin's purpose and protects against corporate mismanagement. So bubble does not have to hurt retail investor the way ICOs did. If people recognize the risk and resist the marketing spin of corporate Bitcoin treasuries, so this cycle can end differently if hype wins out over fundamentals. So the crash will be swift and painful. So Bitcoin is not a shortcut to wealth. It's free money. So yeah, this is the true thing that they shared. And I have the bank campaigns for you guys as well. It's the activity where you deposit and get 20% bonus and then extra reward on top of it. So transfer to futures account and then you will be able to get up to 200 USDT bonus. And then second, you can trade more to earn up to 200 USDT extra rewards. So this campaign will end around on 13 December UTC plus 8 at 2 p.m. Don't forget to register as well, because this is the campaign that is tailored for the KOC and the community under them directly. Okay, this is the business around ecosystem that I have seen this new on Decrypt, and I would like to share with you as well. So far, MoonPay granted New York Trust charter joining Ripple, the crypto payments firm. MoonPay has gained regulatory approval in New York to safeguard customers' digital assets and facilitate OTC trades. So the MoonPay gained regulatory approval to safeguard digital assets in New York. And the charter will allow the company to also provide over the counter trades. And both MoonPay and MasterCard team up on the stablecoin payments in May. Exciting. So MoonPay had gained regulatory approval to safeguard customers' digital asset after receiving a New York Trust charter, according to a Tuesday press release. And in addition to being able to hold digital assets on customers' behalf, the company said the charter will also allow it to facilitate over the counter trades, which occur directly between two parties as opposed to taking place on a centralized exchange. And the milestone reflects the company's commitment to Wall Street grade compliance and security. So the co-founder and the CEO, he's the Ivan Soto-Wright, said in the statement that it enables us to deepen relationships with global financial institutions, expand our regulated service offerings, and continue bridging traditional and digital finance together. Tom Hook, Global Chief Compliance Officer and U.S. Chief Compliance Officer at MoonPay, he told Decrypt that its first products enabled by New York Trust Charter are in the works. So MoonPay Trust Company gives us the regulatory foundation to offer custody and over-the-counter trading, he said. While the products aren't ready for launch yet, so development is well underway to ensure they meet the highest standards for security, compliance, and institutional grade operation set out by NYDFS. So he added that such services can also be provided in other states once MoonPay completes appropriate steps in each state to do so. So Paxos know then as Upbit's become the native firm to secure a New York Trust charter over a decade ago. And these companies are regulated under New York Department of Financial Services, so which also regulates crypto firm under its BIT license regime. So only a limited number of companies have secure a BIT license and New York Trust charter, including crypto exchange Coinbase, payments giant PayPal, XRP, Ripple, and NYDIG, a Bitcoin focused financial service firm. So meanwhile, Coinbase stable coin issuer Circle and crypto exchange Crypto.com are among those aiming to secure national trust bank charters, encourage digital become the first federally chartered digital asset bank in 2021. So although stablecoin need approval under the NYDFS, MoonPay said the charter provides it with an for issuing stablecoin under the Genius Act. Experts say the legislation passes this summer could unlock competition from the likes of the Citigroup. As well as earlier this month, the company introduced enterprise stablecoin business by integrating with infrastructure platform. More MoonPay said it to manage fully reserved digital dollars across multiple blockchain. So historically, MoonPay had allowed customers to purchase crypto through various methods, including Apple Pay and debit cards. In May, MasterCard said it was tapping MoonPay for stablecoin powered cards, which convert crypto to fiat for payments automatically. So this is the opinion from Decrypt and so new patch update. They are doing very good. Okay, and this is the news of the HIP3. It's the future of finance. Everything that you need to know, and Hyperliquid price prediction in December, as well as SBTE, are they gonna list on HIP3? And so far, the conversation around Hyperliquid's price and its rapidly expanding ecosystem has completely changed since the rollout of the HIP3 upgrade. And this transformative upgrade turns Hyperliquid from a single perpetual exchange into a fully decentralized, permissionless exchange of exchanges. So with the new markets launch, daily trading slashed by over 90%, and builders pouring into the ecosystem, HIP3 is being described as a pivotal shift toward the future of on-chain finance. And this article breaks down what HIP3 is, why it matters, where Hyperliquid may be heading in December 2025, and whether SBET lists on the new system. So HIP3 is the future of finance. The abbreviation HIP3, it comes from Liquid Improvement Proposal 3. It is the protocol upgrade that transforms Hyperliquid from a codex into a permissionless platform where any developer can deploy a new market by staking 500,000 HYPE, roughly around $16 million at the current prices. So the change pushes Hyperliquid into a new category. It's not just a derivatives venue, but it's a modular infrastructure layer where builder can create their own exchange. So going order books, low latency execution, and advanced margining, it combined with recent growth mode, and this enables deployers to slash taker fees from 0.045% to 0.0042 to 0.009%. So this is with the deepest discounts dropping below 0.002%. It's a cost structure competitive with the most efficient centralized exchange can do. So early HIP3 projects demonstrate team to buy a ticker and now offer perpetual trading for US stocks in Tesla, Apple, Nvidia, Amazon, and a synthetic Nasdaq index XYZ 100. So volumes have already surpassed $500 million per day, proving robust demand for 24/7 on-chain. And so the price of the Hyperliquid in 2025, so far prices have followed the overall crypto trend and haven't been performing too well. However, as we observe, fundamentals continue to accelerate at an increasingly rapid pace. So currently the high price is at $34, testing the channels, which has now become resistant. So Hyperliquid managed to reclaim this level. It means that it's getting back into that channel right at 40, having previously tapped oversold territory. So the MACD is also showing a sharp awakening with a possible reversal to green. And the missing piece or that we have to keep an eye on is the volume. So if volume confluence with everything else, we can expect the price to reclaim the resistance and the upper line of the channel at $50. So we'll expect let's on him. Expect is the Sharplink gaming tokenized common stock another project that is not related, but yeah, I can share. So it has attracted attention because HIP3 naturally supports real assets and tokenized equities. So however, there is no official information about that. And that said, HIP3 permissionless design allow any builder to stake HYPE, win a dash auction, and deploy and expect perpetual if they see sufficient demand, since trade.xyz already supports US stock perps. The work is clearly in place for similar assets, and given Hyperliquid growing interest in RWA's stocks, synthetics and tokenized equity and SBET perps is plausible for now. So however, it remains speculative with no concrete signal from builders or the Hyperliquid core team. And this is the key takeaways. HIP3 milestone over 500 million in volume, and the Hyperliquid price prediction in 2000 in December 2025. So to share with you guys again, we are having the Bank activity in the comment, and you can deposit and get 20% bonus, and then plus the extra rewards on top of that. So we can transfer to futures account, and then you can get up to 200 USDT bonus. And second activity, it is the trade more to earn up to 200 USD bonus. This campaign will end on 13 December this month, next month, this year at 2 p.m. UTC plus 8. So don't forget to click the link, register, so you will enjoy the rewards, and only the eligible participant from the link that can participate only for the details for the rewards that we are going to share with you guys. Thank you for listening for the news, and see you again next live streaming. So this channel is all about the news in crypto and market opinion, live market check-in. So I am happy to have you guys at this journey and join me on TikTok as well as X. And now to you guys, TikTok GraceTalksWeb3 and X. Yes, this is the TikTok. Grace from BKK, sorry. Grace from BKK is the TikTok. And X, it's the Grace Talks Web3 that we are going to talk about news and further details. Oh, it doesn't load. Okay, right here. We have the news that I'm going to share. SBT, now Hyperliquid, etc. So thank you for listening and watching. See you. Have a good night and have a good day. If you guys prefer to learn about anything, just drop me the comment and I'll pick up the details and digest the news and share with you guys as well. So thank you for watching. See you again next streaming. Bye.